Welcome everybody to this portion of today's panel session on international expansion of Thai corporates. We are honored to have with us here today the leaders of two Thai corporates that are at the forefront of expanding internationally. While both TUF and Bumrangrad Hospital are rooted right here in Thailand, the majority of their revenue are now derived from the international market. As one of the largest names in global seafood industry, TUF has a production footprint in 6 countries and derive more than 90% of its sales from outside of Thailand. The company has some of the most recognizable brands such as Chicken of the Sea in the US, John West in the UK, Petit Nevers in France, as well as Select right here in its home market of Thailand. Bumrangrad Hospital, in addition to being one of the top names in Thailand's healthcare, is also one of the top medical tourism destinations in the world. Bumrangrad is regularly featured in global media such as CBS and Patients Without Borders, and has been consistently ranked as a top medical destination. Today, we will have a chance to learn from the men at the top of these two Thai organizations with the ability to really compete in the global arena. We have prepared a list of questions and would like to ask both Kun Thiraphong and Kun Dennis to comment. So without further ado, let's go to our first question. Kun Thiraphong, could you please share with us the context and the thinking that underpinned your first decision when you decided to go international? What made you decide to go?
Yes, thank you, and good afternoon, everyone. Our company is simply a seafood company, and we started our business since 1977 as a small tuna canning company. And like all the other Thai companies in Thailand, we were just an OEM supplier. And it's always our dream to own our brand, because as an OEM supplier, you just live your life on the other people's hands. So up until 1996, it was our first time to invest in US. And frankly, when we first invest in US, it's not really for expansion purpose, it's more for survival. At that time, 1996, one of our customers in US went bankrupt. And it was quite a significant account for us. So we decided to go to the market and try to acquire the company. And that's how we started our first venture in the US market. And since it was our first investment in US, we decided to do a joint venture with our US partners, 50-50. And we acquired that company, which was only a tuna cannery in Terminal Island, California, which led to 1997 when Chicken of the Sea was again bankrupt, another bankruptcy. So we, together with our partner, went on to acquire the company from the bankruptcy court. So since then, we learned from the investment outside Thailand. We see basically a good return on investment, and it gives us more opportunity to have a wider eyes in the other country outside Thailand. And since 1997, we continue on to make a couple of investment in US, which include another frozen seafood company in New York. So that's how we started. So you asked me why we go out. I think the reason we go outside of Thailand, it's for our survival. Okay?
Okay, thank you so much for that. Kun Dennis, would you mind also sharing with us your reason, or Bumrangrad's reason for first decided to go outside of Thailand?
Interesting enough, it was the same reason, for survival. The original move towards trying to open markets, and for us, exporting is really importing the patient. So to import the patient back into Thailand to utilize the services that were available at the hospital began in 1997 when the domestic market softened. And as a result, the original management team. Some of them were out of the U.S., some of them were out of Singapore, out of Mount Elizabeth Hospital there, which was the initial hospital that began doing medical tourism in Southeast Asia. That knowledge base was at Bumrangrad, and they began to look at opportunities outside of Thailand to expand the patient base. So it was in reaction to the softening of the market locally that they expanded internationally. And then there was a series of events that continued to expand our interests and focus to international. We've gotten to the point now where we have subspecialized in the various services we offer to where we can no longer be just a domestic company. We have to have this large patient population. That means we have to be global in our outlook to be able to continue to offer the sophistication of services that we offer that the general population of Thailand just wouldn't allow us to do. So a lot of this has just been out of necessity.
Okay, thank you for that. Now, both companies have a lot of businesses in faraway countries like the U.S., Europe, and maybe to a less extent our closer neighbors such as Cambodia, Laos, Myanmar, Vietnam. Maybe may I ask that you can also comment on the business opportunities you see in countries that are closer to home, and what kind of opportunities you believe we have in tapping these markets going forward?
Well, if you ask me about the country near Thailand, frankly, it's not really our market. When you look at our product portfolios, our products are mainly for the Western countries. Therefore, you can see that we have been expanding more in the US and in Europe. Regarding ASEAN, from what we see as a long-term opportunity in terms of market expansion. And short-term benefit, it's more to access to the raw material within this country. That's how we see this region.
For us, actually, the largest single country outside of Thailand, as far as our business is concerned, is actually Myanmar. And it represents now about 7% of our revenue. So we've see our neighboring countries as major sources of business for the hospital here. However, if I'm looking at investments, it's typically to improve the channels to bring business back into Bangkok. And those channels, we made a recent investment in Mongolia into a hospital there, and that's really to help funnel additional referrals back into Bangkok. So not only do we want to have a viable hospital there in Mongolia, but we need the synergies of providing the capability that's not available in Mongolia to the patients there, and that means them coming back to Bangkok. So it's more channel development for the Bangkok hospital than any other strategy as far as acquisitions outside of Thailand.
I see. So, we understand that in the past, some of the overseas expansion has been more out of necessity. But looking ahead, in the future, as you explore new opportunities outside of Thailand, what would be the countries that you might be interested in, and what factors do you use to determine that particular market's attractiveness?
Well, for us, you have to understand our business first. Our company pretty much focusing on 6 business categories, which include tuna, shrimp, pet food, salmon, sardine mackerel, and ready meal. And within these 6 categories, we then look into the market globally, where are the opportunity for us. And in the past, we were focusing on US first, because when you look at US, is the largest single market in the world, at least for our industry. And so far, we have been investing in US in the last 20 years. And today, I must say that we pretty much cover at least 3 categories within the 6, which include tuna, shrimp, and pet food. In 2010, we looked beyond US. We looked into European market, where we invested in the company called MW Brand, which have 4 major brands, cover 5 major countries in European continent, including France, UK, Ireland, Holland, and Italy. But in Europe itself, there are still many other countries and where we see a lot of opportunities. We have now so far been expanding into Germany, Scandinavia, including Middle East. I still see a lot more opportunity in the marketplace because in Europe today we have only canned seafood business in Europe. We haven't touched upon the other category, which include frozen seafood and salmon, sardine, mackerel. So I still see plenty of opportunity in European market. And having said that, there are also many other continents that we hope to expand into, for example, in South America, Africa, and Middle East. So these are all the continents that we want to see our presence in our region.
For us, it's a 2-pronged approach. One is opening new markets, and we're currently focused on North Africa, Kazakhstan, Indonesia, where we currently don't have a large population base utilizing the hospital. As far as mature markets where we would put assets on the ground, it would be Vietnam, mostly because it has more doctors per 1,000 population than Thailand does. They just happen to be mostly in the public sector. And Myanmar, and there we need to move more into a high-tech orientation because there aren't a lot of doctors that are available in Myanmar. Same holds true for Cambodia. And we need to look at how I can utilize the Thai doctor expertise without having the doctor actually in the country. So things along the line as shipping back radiology exams that are interpreted in Thailand, and then we send it back to Myanmar or Cambodia. Same goes with lab or any other diagnostic facility that may need expert interpretation that's not available in the country. So we're looking at how we can utilize the current communication technology to allow us to do remote medical care.
Okay, interesting. Now, as you go into these new countries that you've mentioned, how important is it that you have a competitive advantage in that new market? Would that be something that you must have before you enter, or is it something that you believe you can build up as you go into these new countries and new market?
Well, for us, our core strength is on the operation side. We believe we are the least cost producer in our seafood space. What we've been lacking of is more the brand and market access to the consumers. That's why in the past many years, we have been investing or acquiring brand in the overseas countries, including US and Europe. So that's going to be our strategies going forward.
For us to enter a new market, we typically have brand recognition, but what we must develop is trust. And when we're talking about healthcare, that's one of the major components to whether a patient utilizes you or not, is whether they trust you. And that takes time. We typically have several different means of entry portals into our business. Number one is the checkup, and that's because most individuals understand not too much can go wrong in a checkup. Brain surgery, heart surgery, some things can go wrong. So to develop trust, they will test us out with more basic level of care, more discretionary level of care, and then it's word of mouth that typically helps build the market. And when it gets to a certain size, then we start implementing our typical strategies to open it up further and have greater brand recognition. But the main driver for our success is the doctor at the hospital, and we continue to focus on recruiting the top doctors that Thailand has to offer.
Kun Dennis, so would you say that building trust to the international market is your biggest challenge in continuing to expand your business overseas?
That's a yes and a no. Yes, if we're not well known in the country, and Mongolia is a decent example in that 80% of medical tourism out of Mongolia goes to Korea and 20% comes to Thailand. And Korea's been in Mongolia for a lot longer than we have, and it's a matter of developing that recognition, and we are starting to see that now in that when asked which is the best known hospital in Mongolia, it is Bumrangrad. But what we're also fighting is the logistic infrastructure. There are 3 flights to Seoul each day from Ulaanbaatar. There's 3 a week to Bangkok. So we also have to have other infrastructural assistance that are beyond our own service. We initiated, initially we're using chartered air flights to help bring patients down from Mongolia.
Kun Thiraphong, so you mentioned that your main competitive advantage is being a low-cost producer, and that one of the key growth driver for you is to look for brands in the international market. What would you say is your biggest challenge in looking and acquiring or finding these potential brands that you could potentially buy or acquire?
I don't see it as a challenge to find a brand, because in our space there are not many brands in the marketplace, and we kind of know everybody. We all friends. I think the key challenge is when they're going to be for sales, and then next going to be what's going to be the price, the right price for us, and after we acquire US and in Europe, there are less and less brands available in the marketplace, and I think that's the challenge. And the other challenge to me is also the region. For example, South America, I think the challenge for us is to understand the culture, the people in that particular region, and we have been kind of hesitate to get into this region, and we try to identify the right partners to help us get into the region, and that's, I think, more the challenge for us.
Thank you. Kun Dennis, when you talked about your latest acquisition in Mongolia, which is recent, can you share with us a little bit of your thought behind acquiring, other than that Mongolia is a big source of referral for your patients, and maybe also on other potential expansion? Would you be interested in expanding into other countries, whether through greenfield or more acquisition, and why you think you would like to do so?
Well, the acquisition of Ulaanbaatar Songdo Hospital, one, it fit our investment criteria and our strategy. It offers us the opportunity to expand that facility, improve its clinical capabilities. So it was purchased with the intent to further expand. So the brownfield opportunity was rather significant, and the potential for it to go from the leading private hospital in Mongolia to the leading private hospital in the region is available. And the more we can make it a draw within the region, the greater the likelihood we can refer additional business down to Bangkok. So again, it's just a channel development to help build the business back in Bangkok. For us, it's better for us to do an acquisition than a greenfield. The reason being is the day I decide to do a greenfield, it's 7 years before I break even. It's a year of planning, it's 2 to 3 years of construction, and it's 3 years of operation before break-even point. And that's pretty consistent around the world. So if you're building a hospital, you need to make sure you have the working capital to see it through until you're cash positive.
ครับคุณธีรพงศ์ครับ would you also say the same based on TUF's expansion strategy that you prefer to acquire something due to the much shorter time that it will take to break even rather than actually investing, building up a brand or an operation somewhere else?
I think it depends on where the brands are located. If the brands in the developed economies, I would say that acquiring brand would be easier and make more sense. As you can see from the brand portfolio that we have, a couple of brands in our portfolio are over a century years old. Therefore, in this market, it's almost impossible to introduce another new brand. And that's why we have been acquiring brand in this market. Having said that, for developing economy, I see the opportunity more in introducing the new brand. For example, in ASEAN, we use our own brand, which is Select, and expand into this region because it's a greenfield. There is no such a leading brands in the marketplace. So that's how we see.
Thank you. Kun Dennis, I understand that in the past, Bumrangrad has also had other international expansion that the company has previously done, but has since then exited, such as Middle East as well as the Philippines. Can you please share with us, the experiences from those past expansion? What would they consider successful, or were they not, or what maybe the reasons behind them?
Well, actually, those acquisitions and the management contract were in an affiliated company, which the listed company, Bumrangrad Hospital Public Company Limited, owned 31.5%. The other shareholders were financial shareholders. The strategic intent of that company was to replicate Bumrangrad in other metropolitan cities of Asia. The big learning experience from that is there's too many Thai components in Bumrangrad to replicate fully in most countries in Asia. The only other country that currently fits that same bill is Singapore, and it's already been done there. And I was there in '85 until '92 when that market developed. And at this point, I don't see another market except for Turkey, which is part European, part Asian, as far as developing to be another major hub. Korea's trying, but it's difficult to see an ability to do that. So at year 6, after having gone through that experience, the financial investors decided to liquidate, and we did. And we exited all the markets we were in. At the end of that, the listed company refocus back to Thailand, and that's how we have our current strategy of making sure that there's synergies referring back into Bangkok and utilizing the strengths that it has here and developing the channel referrals to improve business volumes going forward.
Okay, so it sounds like your international expansion strategy has been sort of refined or redefined into, rather than trying to replicate a Bumrangrad in other cities, you are now using maybe those hospitals in each other countries as a referral to send patients back here into Thailand, into Bangkok.
Correct. Most of Asia really doesn't have a developed private sector, and we're also looking at many countries having very little infrastructure. If we look at Myanmar, Cambodia, Laos, it's all very limited as far as doctor availability. It's easy to build a hospital building, it's easy to buy the equipment. It's not easy to have the human resources, and countries have to spend quite a bit of time and money to develop medical schools, nursing schools, to develop that infrastructure that provides medical care within the country. And these things are generational. So if Myanmar decided today that it wanted to have a very high-end medical infrastructure, it would take it 30, 40, 50 years to develop. So it's not something that you can turn around tomorrow.
Thank you. Kun Thiraphong, given your many experiences in international expansion in the past, can you share with us what were the key success criteria on the acquisitions that you believe were successful?
Well, I think all the acquisition that we have made so far, it's been doing okay. And remember, we've been in the U.S. market for 18 years. I think the most important, part for me over the last 2 decades, I think it's about our patience. Okay, I think we've been very patient in managing the businesses. We've been very patient in dealing with the people. And the most difficult country to me in our experience is U.S. When we acquired European company, a lot of people came to me, why it looks so easy to absorb European company? And I told them that after 20 years in U.S., European is easy. Okay, in U.S. A lot of things very new for us, including people, and I think we also have to learn to adapt to the new environment. Number one is how you deal with the people, including your own people. I never had to negotiate with my people, but in U.S., you negotiate every day. And it's very difficult for us. Second, I think law, litigation, it's also very, important or very normal in U.S. I never go to court in my life in Thailand. I went 3 times to U.S. court, so during the last 18 years, so I can tell you. And one of the board meeting agenda is litigation. Okay, the last agenda every time is what's the new litigation. Okay, so it's been a very, very exciting, very challenging, very rewarding and tiring. Okay, but I must say that as a Thai, I think what I can see is that we are very patient. We have ability to listen more, and I think we are very adaptable to the new environment, and that's how I feel we can be very successful in managing the overseas companies.
You mentioned people as one of the first challenge that you went through when you first expanded internationally. How important is it that you hire local locally, to help you run the business in each of the countries you're in? Or is it better for you to bring in or send over someone from Thailand?
Yes, I think, again, we never plan ourselves to expand overseas. We never recruited our people for overseas expansion. Therefore, we had nobody. When we invest in US, I think we sent only 1 or 2 people there. But the way I think is that any employees, including in our overseas company, are our employees. We have to treat them as our people. And also, fortunately, that these companies are usually my former customer. Therefore, I know most of the management team there. So it's kind of helped when we got into the business. But having said that, it's not easy. The more we expand, we see that people issue become more and more important. And we have to try to utilize the local people as much as we could. And I don't believe to just send Thai people to station overseas unless they can contribute something. We don't need any watchdog into the system. And so I think it's okay to use the local people. So far, we don't have any issue working with the locals.
So that sounds like an opposite of what CP Food is doing. As CP Food expand, they usually do send local employees to overseas operations. But in your view, that's just not something that is necessary.
In fact, for our company, everybody say we are a global company. But I would say that we are in a global business, but we are not a global company yet. But we are developing ourselves to be a global company. And instead of using Thai people, in fact, I try to internationalize our company in Thailand. So even in our Bangkok office, frankly, we just recruited new expat. We have a new group CFO who is a German, formerly working in US to be our new group of CFO. We have a new head of strategies who is American Pakistanis, moved from Dubai to Bangkok. So to me, to be a global company, you don't need to be any particular citizen, okay? As long as we can communicate across the board, I think that should be okay.
ครับ คุณเดนิส given that you are an international expat working here in Thailand, I think maybe you have something that you would like to share, or maybe share with us your view on Kun Thiraphong's comment that he just made.
Very similar. We have one additional constraint, and that is legally to obtain a license for a profession. Each country has its own requirements, and typically one of those is language. A good example is there's a cardiovascular surgeon, ethnically Thai, but second-generation American, can't read or write Thai, can't pass the medical exam. So we have the restrictions of, even if I wanted to send a Thai doctor to another country, I still have to meet the regulatory requirements. As far as utilizing the Thai expertise that we have here, we do that, but it's on an assignment basis. And it's typically for quality infrastructure development in the hospitals that may not have the capabilities that are available here in Bumrangrad. So we typically will have to look at how we do things within Bumrangrad. If we go back 5 years, everything was written in Thai. We've had to convert to English, which then, let's use Mongolia as an example, the English version of our policies and procedures and processes goes to Mongolia in English, and it's translated then into Mongolian. So language becomes an issue, especially if you're talking just regionally. It's a matter of utilizing the expertise and where it's available. And I would agree, we tend to look at where we can access that expertise. If it happens to be Thai, it's Thai. It's still an expert. And whether it's from another country, it's still an expert. And being able to utilize that from within the company, our managing director has been very much focused on just utilizing talent no matter where they're from. And as a result, the company itself does tend to consider itself an international focused company. And it all gets down to expertise.
Thank you for that. Given all your past experiences, Khun Dennis, with trying to expand your business internationally, could you maybe share what is the biggest lessons that you drew from all the past experiences, both successes and failures? Maybe share with us just the key lesson.
Well, the number one criteria for success in healthcare is having the right doctor and the right nurses. So that's the first thing we look at infrastructurally is it available? After that, it's understanding how you get paid. Here in Thailand, it's pretty simple. It's mostly cash. If I go into other countries that are either insurance-based or some other form of reimbursement, whoever's paying the bill kind of drives how the operations work because they're the ones making the purchase. One of the reasons I went into the international healthcare management area is the U.S. was more focused on the interest groups than the patients, on their delivery system. So there's far too much influence on how care is done, driven by the government, the insurance companies, and other payers than the patient themselves, because the patient's not paying. And so it does alter how your business operates, and each country has a different mechanism as far as how healthcare is delivered. But ultimately, the practice of medicine is the same around the world. It's just how the delivery system is put together.
Khun Thiraphong, would you also mind sharing with us the biggest lessons from your past experiences so far?
Yes, I think the key lesson that we learned is that when we invest in any brand, we would consider to invest only number one and number two, not lower than number two. So that's what we learned. And we would look for good company, profitable, and rather pay high price for good company rather than low price for bad companies. That's what we learned.
In terms of, at the moment, going forward, what countries or where do you see opportunities? Where is interesting at this time for you, for Thai Union Frozen?
Well, as I mentioned, even in the US and Europe, we still see lots of opportunities besides the other region that I mentioned earlier. And when we look at the investment, we look into any asset within the 6 categories that we are focusing on. And within these 6 categories, we have the opportunity to invest from downstream, upstream, midstream. So I see there's still plenty of opportunity. And within the 6 category, the 2 largest category for us are still tuna and shrimp. And we like to see the other category to double or to be a double digit, like salmon and sardine mackerel. So I think you will see more action into the other category in, I would say, in the next 12 months.
You mentioned that you don't mind paying expensive valuation for a good business, good company. Is there a metrics or a maximum limit to what you would be comfortable in acquiring in terms of valuations or the value of the business?
Well, we tend to look at the return on investment, and I think the lowest we would consider is 12%. Because sometimes, especially now, valuation in some market is very high, especially in the US today, due to the low interest rate and the money available in the marketplace.
Kun Dennis, going forward, how important is international expansion for Bumrangrad Hospital? Do you think that you would try to replicate what you did in Mongolia in other countries? You mentioned other countries like Kazakhstan or Africa before.
Two different expansion avenues for us. One is without investing equity into a market, but simply trying to capture business that is available in that market. So Kazakhstan's a new market entry as far as trying to capture the business that is leaving the country now or is contemplating leaving. And a lot of this depends upon the wealth development that occurs within the country. And in emerging markets or frontier markets, the country will develop wealth before it develops the medical infrastructure. And that's kind of that gap period is where we sort of target our focus in the various countries. Others, like Indonesia, people have been leaving Indonesia for healthcare. I started in Singapore in '85, and they were leaving then. So you're looking at 30 years plus that they sought healthcare outside, and it's still a very large market. So similar to the U.S. being a prime target in the tuna business, for us, Indonesia is within this region the big fish. And just because of population size and the fact that a large chunk of the population leaves. We're more likely to invest on an equity basis into countries that have the medical infrastructure developing. That would be Vietnam as an example, where there are enough doctors, they have an adequate training, and therefore provide a level of care that's acceptable. So that's our criteria is we really need to see that the doctor is there, the nurses are there, to allow us to provide a level of service that would be commensurate with our brand.
Okay, so from your comment, it sounds like there could be a hospital that you will build in Vietnam in the near future.
I'd rather acquire one or a group of hospitals. The private sector is developing in Vietnam, and it's, as previously indicated, it's a matter of finding a willing seller at an acceptable price.
Okay, that's actually quite interesting because one of the other main hospital groups in Thailand, Bangkok Dusit, has ruled out Vietnam for regulation risk. Is that something that for you and for Bumrangrad not as big of a concern, or you see solutions or workaround to that?
If I was worried about regulation, I never would have went to Singapore and I never would have come to Thailand. Both have evolved over time, and so it's a matter of, in real frontier countries, it's making sure you have the right partner. Someone who understands the local regulatory issues, can assist in getting them addressed, can introduce you to the right people to help understand the regulations and how to operate within the system. But every country has its certain regulations. The U.S., high litigation, and so it's a matter of understanding it rather than drawing away from it.
Thank you. Kun Thiraphong, you talked about the U.S., Europe quite often. When we talked about international expansion, you briefly touched on the opportunities here in Southeast Asia. You mentioned that you are now also trying to build up Select as a brand that would hopefully go into the other countries in the region. How promising do you see the Southeast Asian market, given that it is growing quite quickly, that we have the AEC coming up next year? What are your plans to really try to capture that potential growth?
Well, it's growing, yes, but it's still a low-income countries, especially the developing economy like Myanmar, Laos, Cambodia, Vietnam. And for our product portfolio, tuna is still considered expensive for these countries. They consume more on the sardine mackerel. And even though we are in this category, sardine and mackerel, we are not the leader in this category, in this region. So I would say that it still needs some time, especially for us, to expand into this region significantly.
Would you consider acquiring a leading sardine mackerel player in the region?
Well, in this region, many of the business owned by family, and it's very challenging to acquire any particular brand or company in our space so far.
Okay, so it sounds like it's higher chance of finding something in a bigger country or a more developed market.
I think in this region we will grow organically. Acquisition, it will be from the other part of the world.
Okay. And then last question, just for both Kun Thiraphong and Kun Dennis, can you please just maybe share with the audience, any advices that you may have for businesses that are looking to expand internationally, maybe other Thai companies that are looking to grow its footprint, not just here in Thailand or in the region, but really go and compete out in the global arena?
Well, I think to expand overseas, I believe that you must at least have some kind of competitive edge to get outside of Thailand. And to me, if you are not strong enough in Thailand, it's going to be even harder when you go outside Thailand. And for us, as I mentioned earlier, we are the largest, even though when we were OEM, we were the largest OEM producer in the world. We believe we are the least cost producer with high quality among the peers in the industry. So that's how we can expand overseas in our case.
Thank you. And Kun Dennis?
I would agree. You need to have your competitive advantage and understand what it is and understand what strategy you're trying to fulfill. For us, it was a large group of highly qualified doctors that drew in the patients and allowed us to see continued growth. Again, most of our business comes from word of mouth. So a happy customer, a happy patient tells a number of people about their experience, just as well as an unhappy person tells a lot of people about their experience. So having the highly qualified Thai doctor, the Thai culture of service, and the processes that have been developed over a 30-year period of time gave us an advantage to be able to draw in initial patients, provide a satisfactory service, and they then told their acquaintances about it, and the business grew. It then allowed us to continue to add more and more highly qualified staff, and that got us to the point today. So for us, it's a matter of making sure that the service we have here can actively compete with anybody in the world. And we compete with Singapore, Korea, US, Europe, and as a result, we have to have the capability to do that with our people. And so we do a lot of training and a lot of development as far as our technologies and our capabilities.
Okay, so it sounds like even though when you first venture abroad, it was out of necessity, you wouldn't have been successful if you weren't already the most competitive player, at least here in Thailand or in the region. Okay, looks like our time is up. I would like to thank Kun Thiraphong and Kun Dennis for being with us here today. Thank you, everyone, and hope to host you again at our next year Thailand Focus Conference.
Thank you very much, and may I take this short opportunity to open the floor for a Q&A session. And any one of you has questions, please raise your hand or write it on a paper and pass it over. Please.
Hi, this is for Mr. Seafood. This is for Mr. Seafood.
Don't ask too difficult questions.
No, it's pretty straightforward. First of all, it's good seeing you. Been a while. Can you share with us your mindset or expand a little bit more of how do you arrive at the right price when you look at the potential acquisition? How do you determine the right price? And how do you distinguish between a good company and not so good company? And lastly, feel free to use Bumblebee as an example.
Well, good company, I think when we look at good company, we look at the brand positioning, if they are number one or number two. We also look at the profitability, their ability to make profit. That's also the other element that we look into it. In terms of return, I also mentioned probably 12% return. That would be the lowest that we can consider. So these are what we are considering. Talk about Bumblebee. If you mention about Bumblebee, it's a number 2 brand in the U.S. market. If you take in my consideration, it's a good company, right? But the price can be very high from what I hear in the market. And the size is also very big.
So meaning, with the size being fairly big, you're expecting higher return?
No, not necessarily. I think if it makes a fair return, even big or small size, I think it's okay. Okay, so no comment.
Any other questions? Or I also have a few questions here with me. Asking TUF, Thai Union Frozen, EU is going to stop giving out GSP to Thai export pretty soon. Would you share with us to what extent TUF is affected from and this event? And does TUF do anything to deal with the GSP benefit removal?
Yes, regarding GSP, it would probably affect only the frozen seafood part. And I believe it will have some kind of impact on our business. But having said that, we know it's going to happen. What we have done so far is to focus on high value added product and also move into the other countries besides Europe. I would say overall, you don't see any impact on our business overall.
Okay, any other questions? There's one more question for TUF here. How do you manage monetary performance or problem of large organization in Europe and US? The large organizations in Europe and US.
Our company in Europe and US?
How do you find way to manage this?
First of all, our two companies in US and Europe, they have a good management team. And the way we manage by working closely with the team in US and Europe. I don't see any different from managing company in Thailand, except it's a much distant from Bangkok.
All right, if no more questions, thank you very much. Mr. Thiraphong Chansiri and Dennis Brown, the panelists and moderator, thank you very much.